actually closed a VA loan with a 490 credit score.
Wow. For people that don't know, that's huge.
You say that, and you're like, dude, somebody with a 490 doesn't need to buy a house.
Which
But
that's not the full story.
it's not the full story,
Correct.
right? So there are certain things that we do and make sure that like it's not just somebody that hasn't paid a bill for the last 2 years. There's a lot of certain things that went on that were impacting that score. When you look at the full picture, they really could afford that home.
Welcome to the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We're sitting down with real estate pros, insurance nerds, mortgage masterminds, and local legends who are making moves on the Space Coast. Hosted by the best insurance crew in the 321. At Studio 321, it's all about community, real connections, and sharing a few laughs along the way. Strap in, let's launch into today's episode.
Today on the Studio 321 podcast, we're sitting down with one of Brevard's top producers and an absolute force in the mortgage world, Josh Quibodeaux from CrossCountry Mortgage. Josh has built a reputation for being one of the most solid, dependable professionals in the business, someone who truly cares about people and relationships. We'll talk about how he got his start, what's driven all his success over the years, and how he's built his team, and what keeps him fired up in this competitive industry. Let's dive in.
What's up, dude?
What's going on?
Yeah, thanks for joining us, man.
Dude, Brevard County royalty here in the studio.
Oh man,
No, thanks for taking the time,
Sir,
bro.
Sir Quibodeaux, dude.
Don't let me hang.
appreciate
Don't
you
let me
guys
hang.
having
Don't
me
let me
in
hang.
there.
No, I know an hour out of your day is like a week, so this is means a lot for us, man. Thanks.
No, I need to be forced to take a little time to do something.
Yeah.
Yeah, dude. No, we're stoked to have you in the studio, man. This is awesome for us.
I'm glad to be here.
So-
Yeah.
Thank you.
Those who don't know you, tell us a little bit about your background. Where you came from, how'd you get started in the mortgage world? I've known you for over 20 years, so I don't even know this story.
I was actually thinking about that yesterday. I was trying to think, like, I'm pretty sure it's like 25 years.
Yeah, in high school, bud.
Yeah.
Yeah.
Which is crazy.
Met you through Siddons, yeah.
Yeah. Gosh. All right. Well, originally I'm from Texas. I have family here, lived in Titusville. So I would vacation here, summertime stuff. And then when I graduated high school, I came for the summer, and then just one thing turned into another, and I never went back.
Oh, really?
That's really how I ended up in Florida.
So you didn't move with like parents or anything? Just
No,
you, huh?
Just me. Yeah. And I came from the smallest of small towns.
Yeah.
Like, I mean,
What are we talking population?
I couldn't even give you the population, but I can tell you I graduated.
1,500.
I graduated with 8 people.
Oh,
in my high school class.
Really?
Yeah, 8 people.
Wow.
So on every resume I ever submitted, it does say I was in the top 10 of my class.
Nice.
Dude, that's a nice little manipulation. I like that.
That's awesome, dude.
No, but it was, so moving from there to Titusville was like a metropolis,
Yeah,
And,
yeah.
Titusville's obviously.
Which, if you're from Brevard,
you know,
whoa, dude.
Titusville's Titusville, right?
Yeah.
But
No offense to Titusville, by the way.
Right, but coming from where I'm, grew up to Titusville, I was like, oh man, this place is amazing.
That's crazy.
They had friggin' McDonald's.
Yeah. How do you think that? How do you think that's kind of crafted you as a person today? Like growing up in such a small town, and
I wouldn't change a thing.
yeah,
Not even close.
Probably makes you more grounded.
I got to do everything, right? I got to play all the sports.
Yeah.
I got to do all the things.
dude, you were a starter on every team. Dude.
Every team played both ways.
Yeah, exactly.
A starter on the team and top 10 in your class.
There were some times where after report cards came out in football season, it was touch and go.
That's funny.
Yeah, but no, and gosh, it wasn't too much longer, right? So I was 18 then. I started doing mortgages when I was 22.
How did you get into mortgages? Met somebody?
It was a crazy little random. Obviously, I started waiting tables, doing that, right? Going to school. Then that led to bartending. If anybody remembers MJ's, right? Back in
That's
Titusville.
right.
Yeah, bartended there for several years.
Wow.
Actually, I segued into the mortgage business while I was still bartending because, it's obviously kind of a slow start. So for probably the first year and a half, I was still bartending, getting home at 3 o'clock, 4 o'clock in the morning. It's rough. But the mortgage industry was night and day back then than it is now.
And you started at a small shop in Orlando, right?
I did, yeah. I started at a company called Liberty Mortgage Group.
Liberty, that's what it was.
Liberty Mortgage Group. Yeah. But even funnier, how the word mortgage even got on my radar was my brother-in-law in Texas put me in touch with a company called Primerica. Anybody heard of that? Yeah. Right. So it's a subsidiary of Citigroup. It's a large company, but it's more of like that pyramid style where, like they recruit you, they encourage you to get your life and your health insurance license, your mortgage, securities, that sort of thing. And so they got me, set up with the education, got my mortgage license, and I didn't care for the life and health at all.
Yeah.
Didn't want anything to do with it. But I really took to the mortgage thing. For whatever reason, another friend of mine in Orlando that worked at Liberty Mortgage Group, we ended up talking, actually Siddons, right? So we were all friends. Siddons went and got his mortgage. And we went and interviewed like 2 weeks later, and next thing you know, we're just driving from Titusville to Winter Park every day.
Dang.
And gosh, it was a different world back then. Yeah.
What was so different about it?
Yeah.
I think.
What year was that when you got in?
2002.
Okay.
Yeah, wow. December 2002. So so I'm coming up on 23 years.
Yeah, that's crazy, dude.
Which is wild to think about.
Yeah, so you survived a lot.
Yeah. Yeah, and honestly, I got in at this time.
So was 2002 like a really busy time, or was it slow back then for the mortgage business?
Well, so I was coming in not knowing a single thing.
Yeah.
I could barely spell mortgage.
Yeah. No, I hear you.
At that point. But I got in, and it was just more of what I refer to now as like the wild, wild west, right? Because anybody could get a loan.
Yeah.
You could be a friggin'
that time
monkey with a pulse. And we would get
that was like the no doc days and the stated income.
Stated, yes. Yeah. And so coming into it, it was like I just thought that was normal.
Yeah.
Like, wow, why doesn't everybody do this?
Yeah.
And so that 2002 was like rates were still, if I recall, they were still probably around the 6% range.
Wow.
Somewhere in there. So, but obviously places were a lot cheaper back then.
Yeah.
Right? So it was like the average mortgage broker back then worked from like 11 to 3, I would say.
Yeah.
I mean, we had guys that were like just knocking it out of the park, and kind of like guys that we looked up to just getting into the industry. And dude, they were in the office like 4 hours. And it was just.
That was your calling.
Yeah. So the biggest thing I would say I remember is we used couriers back then, right? That was a popular way to get documents from place to place. Because
I actually remember
you didn't have downloading and uploading back then. That wasn't really a thing. It was coming on the radar.
Overnight packages all the time.
Yeah, but it was courier services because a lot of our banks that we used were local in like the Maitland area. So when we would send a file into underwriting, we'd call a courier up. They'd come pick it up,
no kidding,
drive it to Maitland.
Yeah.
And then, we'd get an email.
Yeah, it's totally different time.
Yeah, way
That's
different.
Crazy.
It's like Uber before Uber existed.
That's crazy.
Right. They had something. They just
So you went from Liberty. You've been, guaranteed rate. Was a guaranteed rate, right?
Yeah. So it was Liberty Mortgage and guaranteed rate in a way, right? Because Liberty Mortgage was a smaller company.
Sure.
When I first started, I'd say we probably had about 40 of us. By the time 2008 came, stuff got real weird. It fizzled. By the time I, went to guaranteed rate, there was maybe 8 of us.
Wow.
Oh, yeah.
That was it, right? Everybody fled the mortgage industry during.
Yeah.
And honestly, 2008 wasn't even the worst time. It was 2009, and then 2010, when the short sales really started to like hit
Yeah,
the
2008
market.
was definitely the start of it. That was
Yeah.
when it was bad. It
Yeah,
was bad,
I mean,
know.
you knew
it was
it was coming.
Correct.
Yeah, as far as guarantee rate thing, it was more like they acquired us, right? Like, guy I'm still friends with, Lawrence Heisler. He was the owner of Liberty Mortgage Group. He's the guy who
Got you started.
got us started.
Yeah.
Yep. And so biggest difference, right, is Guarantee Rate is a retail mortgage lender, and we were a brokerage shop. So we were mortgage brokers. We were that third party middle person in between the customer and the bank.
The banks, yeah.
And they just, at that time, after 2008, they were putting so many more regulations in place to make it harder for that type of company to survive.
Yeah.
And he finally just had to throw in the towel. Guaranteed Rate kind of swallowed us up, which is a funny story. My boss now at CrossCountry, that's how I met him, was he was with Guaranteed Rate at the time.
That's awesome.
So that was a lot to drink in, going from the broker world to the retail world. It was very different, very corporate. Guaranteed Rate, I was not a fan. I did not really like the, maybe that's a little bit of, it was just that
adjustment.
Retail adjustment. But I told myself I'd stick it out at least a year and then go from there. I did. I want to say about 14, 15 months later, I went to Caliber Home Loans.
Caliber, that's right.
Yeah, that was
man.
my next spot. And my thing, I think, even from, I guess probably right at that Caliber switch, is I'd never wanted to go to a company that already existed locally. I didn't want to go to something that already had its reputation. I wanted to bring something new so that I could brand it myself. And, not that every local company has a bad reputation, but I just never wanted to like try and overcome other people's mistakes from.
Yeah, people get a perception on a name of a company
Right.
that came in. So that you honestly answered one of my questions I was going to have. It's like, what you think sets you apart? I think I answered part of that.
That's definitely one of them.
Because
I'd
that's a
say.
great marketing strategy to come in with a name that nobody knows about, but they know you. Hey, this is my new product, new shiny whatever. And you're selling you at that point. You're not selling the company. Well, you are, but you know what I mean.
Yeah. No. In the beginning, it's you, right? And then you're trying to, sell the reason why you're bringing this company to the market.
Yeah.
That's great. I mean, you've been successful. I mean, I got in 2012. Obviously, we knew each other. Been a great business partner with us, and I mean, you've just been smashing it every year. And I always,
thank you.
Say look up, but like your drive to be successful is awesome. Like everybody knows about you. You don't turn it off. There is no off switch. There's no clocking out.
It's a blessing and a curse, I think.
Yeah.
It's
So
a
I
little
saw
bit of a handicap.
I saw a post you made the other day, and I related to it a little bit, where you were like, personal life check, everything's awesome.
Oh,
business life, everything's going great. Work life balance, no comment. And I was laughing. I was like, oh man, that sounds perfect.
It's so true. That's probably my biggest struggle, is trying to
Why do you think that
navigate
is?
that. I think just my personality, and the reason that I was so drawn to the mortgage business is that you can really like determine your own success.
Yeah.
And so without having a clock in, clock out mentality, it's like if you just keep working, keep driving, keep hustling, like it just builds and builds and builds. And I think over the years, have just got addicted to that.
Yeah.
So it makes it hard to shut it off. So it's just something I have to work at.
Yeah,
Like
absolutely. You gotta actually you gotta actually think about it.
Effort
Yeah.
to like, set that time.
Well, that's got to be what sets you apart too, man. Is your ability to grind and your ability to like always be there and be available, making sure deals are getting done correctly. It is a hard balance, right? Because you don't want to let anything fall down.
That's the thing
it's such a competitive market. You only get a couple chances to prove yourself. And,
it truly bothers me to my core.
Yeah.
If we fail, or even if it appears that way.
Yeah.
And that's an unfortunate part of the mortgage business is. Sometimes we're not, but it appears that way.
Yeah.
So
you're not in full control.
Yeah. No, of course not. I feel like if you communicate to your referral partners and your customers, like, in a very good way, like, and regular, even when things do go, south and it's beyond our control. As long as you're like informing everybody, then most people are understanding.
Yeah, absolutely.
What do you
Especially
think?
if they've been around, they understand how things can
Yeah.
happen, right? I mean, there's not really a transaction that's 100% smooth no matter what. There's
Yeah.
always a hiccup in
Not
there.
really these days.
No,
I mean,
it's hard.
They're even the easy ones have their challenges.
Yeah.
So, yeah.
I mean, I don't want you to give away any secrets, but what keeps you so, I don't want to say popular, but like you're very well known in the industry around here. What do you think sets you apart that keeps you fresh in everybody's minds? Like, hey, I'm going to call Josh.
Gosh, that's a great question. It's funny because I really don't do any of this sort of thing. I'm not on social media a lot. Like,
Yeah.
I think what has been the root of my success is really that grind. Like, because I don't really do any marketing, so to speak.
Mm-hmm.
It's more just word of mouth. And I feel like I noticed a little bit of a change amongst like real estate agents during the last few years, where you could tell the market was tough. Interest rates were high. It was just a real tough market for realtors to navigate through. And when that happens, each deal they get becomes very, very important to them.
Yeah.
It's very different from the few years before that, where
they had deals behind it.
Yeah. But when all of a sudden that deal, maybe it's their only one, maybe it's one of a few, but I would notice that I was starting to get calls from realtors I hadn't really worked with in the recent years, but because they were like, I can't risk anything happening here. Like, I want to send it to where it's going to get done.
Yeah.
I think knowing that is super important as well. You treat it differently for them. They realize that, and
it was nice to see.
Yeah, it's cool.
I mean, hopefully, that's kind of what we try to do here too. I mean, we try to be that resource that can figure out a way to get these things done, for our referral partners.
Reliability.
Yeah,
exactly. Not going to make it hard,
Yeah, and try not to be a squeaky wheel. We try to be the grease.
Yeah. You mentioned the industry changed quite a bit. How have you guys adapted along the way with your team? Rates going crazy, changes in the mortgage world.
Well, I mean, to go back to that Caliber, right, thing where I think I was there almost 4 years.
Yeah.
Right? It's about 4 years. I got to a point where I felt like Caliber was just a little, like they were changing, they were shifting to do different things, and it just became like, like I want to hire somebody. It was like 4 people's inboxes had to go through.
Oh, wow.
Just to put a rec out to, like, it was just like a big ship trying to, turn around. It took forever to do the simplest things.
And I was going to hold you back.
I could just tell. I was like, shouldn't be this hard. And
Yeah.
I think that's probably the best thing about CrossCountry Mortgage is we are the #1 retail mortgage lender in the U.S.
I did see that, yeah.
But we are also, like, we have an operation in place that allows us to navigate, like, we're also small at the same time, because they give their branch managers so much authority to operate their branch how they want, instead of having to go through all those corporate ladders and all those processes. So that's been huge. If I want to hire someone now, it takes me 24 hours and I can have somebody coming on right then and there.
That's awesome. That's awesome.
So you as the branch manager, like watching from afar, you built a pretty awesome team, man. You got a really awesome group of guys and girls there.
I really do.
I mean, I'm going to shout out, Lee, Stacy, Michelle, Casey, and all your people, Charlie, Jason, everybody.
Yeah.
I mean, heck of a squad.
Just had a huge pickup with Jamie.
Yeah, huge pickup with Jamie. Yeah, I mean, she's gonna do well. She's got that same, drive, right? She's working all hours.
Yeah.
She's everywhere all at the same time. You can see her
She's
on
all over
media.
social.
She's all
I mean,
over
yeah,
social
she's
media,
really good at it.
all the events, just
She's making
really
a really
putting
big.
in-
She's making
putting in
moves.
the
She's
time.
making a big impact.
Yeah,
You can
yeah,
tell.
for sure. And so that was, and that's just one of those things where I feel like reconfirms for me that I'm doing something
Doing
right.
something
Where
right.
Yeah.
somebody that's successful in the industry, wants to come work for me, and I feel like I can help Jamie grow even better.
Yeah. That's great, man.
What do you think? Like people listening, like as a manager, like what do you think is drawing your employees to come work there under you? You know what I mean? Like what's that driving force? Is it your ability to just kind of let them do their thing, or is it? You understand? Like it's
I think
got to
it's
be
a-
environment, right? It's got to be something
I
that's
think
drawing
it's-
people in.
So I think the answer to that question lies with the level of loan originator that we're talking about, because I feel like once a loan officer gets to a certain point in their career, they realize certain values that like they need.
Yeah.
They realize that they've hit a wall, and to get to that next step, right? You start to learn things about the industry the longer you're in it and the more business you're doing.
Mhm.
And then, so I feel like experienced loan officers know that the things that I offer are valuable to them.
Yeah.
And there are other loan officers out there that, obviously are doing great things, and they, may just not be at that point where these things are as important to them yet.
Yeah.
Yeah. I understand.
Awesome.
Back to the shout out, right? Because I agree. I've been really, really fortunate about having such a great team. Like from the loan officers to like all my girls, the operation staff, Mike Chappett,
Mm-hmm.
Patrick Bullock,
Mhm.
those guys have been, for me especially, like my personal success, like that, you just cannot do it without the whole village.
Yeah.
Absolutely.
It's crucial. And so actually, Stacy and Lee, crazy. Stacy and Lee have worked for me for over 10 years.
Mm-hmm.
That's awesome.
Yeah, which,
Well, that
They
speaks
came-
volumes right there.
yeah.
They were at
yeah.
Caliber and they came over with you.
Yeah,
Yeah.
came over with me, and I want to say honestly, Jason is pushing. He's coming up close
Yep.
to 10 years
Yeah,
too.
he left Wells Fargo for you.
Yeah,
Yeah. That's awesome.
That's
man.
great, man. I mean, it says a lot about you and what you do for your squad. I mean, and you guys are such a tight knit group, so that's super important.
How do you guys rank in the country? You got to be one of the bigger ones.
CrossCountry mortgage
Yeah.
just in general.
Yeah. Or
No, your office.
Oh, at my office in the country.
or in Florida. I might be thinking bigger.
Yeah.
But
no, man. So CrossCountry mortgage is where a lot of like loan officers go to like end their career. So like, at Caliber, I was always in like the top 5, right?
Yeah.
But I got to CrossCountry and I was like a nobody,
Gotcha.
Mhm.
really, because our number one guy, just in October, he's already closed 110 loans.
Oh, wow.
So it's next level.
Different world.
right?
Different world.
It's
Whoa.
humbling, right?
Yeah, yeah,
Whoa.
yeah.
Yeah, it's humbling because here I'm up there, but not anywhere near
That's crazy.
the top, right? 'Cause
Yeah.
there's some mega producers amongst the country.
Yeah.
That guy's in Florida too.
Oh, wow. Okay.
Yeah.
Wow.
Yeah,
That's insane volume.
Insane.
110 loans in
110. Yeah, and he's
It's all real estate? Is that commercial? Is that everything?
no, that's just all residential. Yeah, mortgages. Yeah, and he doesn't even have a real large like average loan size. I'd say his average loan
Is
size.
it mostly new builds then? Like he's pumping out new builds?
I could be. I don't. It's
Yeah,
hard,
who
it's
knows?
hard to monitor.
Yeah.
But average loan size 300, 350, right?
Mm.
Yeah.
South Florida, like, I'm pretty sure he's doing loans in other states too. But
Yeah. No,
yeah,
that's
just
awesome.
mega team.
That's crazy.
Just really, and there's some other producers that are not too far behind him. So
Mhm.
the top 10 at CrossCountry Mortgage is a little different than the top 10 at like
Yeah.
most.
Yeah.
Yeah. It's always good though to have those people that you're chasing, right?
Yeah,
Or
of
it
course,
shows you
yeah.
like what's possible.
Yeah, I would-
Even in our organization, we always kind of hover around top 5 in production always. But like to break into the top 2, it's like
it's
double.
like, oh wow,
You know what I
Oh,
mean? And
yeah.
so it's but it
Yeah.
does show you like, hey, it's possible.
Yeah, I
You
mean,
know?
gives you something to shoot for.
Yeah, no, absolutely.
Yeah, I mean, just in our industry, the top person kind of wrote his own book on how independent agency is supposed to be run, like different human. So
Yeah.
it is something to strive for sure, but that's a different plan.
Yeah, I mean, he's in 0.001% of
Awesome
like
dude,
production in the
too.
country. I mean,
Yeah.
you know, it's just a different
It's
world.
crazy.
Wow.
But I want to pivot a little bit. Congrats on your recent marriage.
Oh, thanks.
Yeah, man.
Thanks.
I saw the
Yes.
videos, photos looked awesome.
Thank you. Yeah,
that's
that was a
great,
big
man.
one. You know, it's funny. You get married in your mid 40s, and everybody automatically thinks you're on your second or third marriage.
Yeah.
That's terrible.
Which no, I'm just like, no, never been married before.
Yeah, I was gonna say,
first
first one.
marriage.
Yep.
Yeah.
How has that helped you get your work-life balance?
Oh,
I mean,
you know,
is it-
she.
It had to have helped.
Yeah.
Oh yeah, I mean, obviously. So we have a 5-year-old son. He literally just turned 5 a couple weeks ago. So we've been together for a long time. We just obviously COVID came and we were gonna do things, and then that derailed it. And so we just kind of took our time. And but yeah, she definitely runs the house, right?
Yeah.
Like, she takes a lot off my plate, things I don't have to think about. So
Oh,
she
yeah.
lets me focus on what
Yeah.
what keeps us going.
Yeah.
you know?
Absolutely. What are some hobbies outside of work?
Oh gosh. Well,
I gotta be honest. I've been friends with you
recent-
forever. I don't even think you got hobbies, brother.
Oh,
Maybe the gym here and there.
Gym here and there. I try, but even that has been tough.
Same with me, man.
I was just telling my wife yesterday. I'm like, I have gone to the gym 3 times in the month of October, which is just
Yeah.
it gets to me.
happens.
It starts to bother me,
Yeah,
and
me
so I
too.
do get to that point where, like, even if I fall behind, I just gotta go do
Gotta
it.
go. Yeah, for sure.
But no, I would say the biggest thing is, we're funny. We're sitting here talking about how I have no time for hobbies, but I'm coaching my son's t-ball.
Oh,
Oh,
nice.
awesome.
That's neat.
Yeah.
That is.
Actually, I take that back. I'm the assistant coach. My wife is the head coach.
Okay,
There you go,
okay,
there you
okay.
go.
Which
Oh man,
was another funny story because that was completely unplanned.
usually is.
I mean, we had signed him up, gosh, months and months ago, and
And then
it's
there-
Vieira Century Little League, huge organization, and we checked in, and right, season's about to start, hadn't heard anything, and he got waitlisted. They had just
They didn't have enough
run out of
coaches.
coaches. Yeah, and so my wife's talking to the guy, and whatever. They're like, yeah, we just. There's
Yeah.
about
Yeah, yeah.
11 kids that
Mhm.
we just don't
Just
have enough coaches. But if you want to coach, we could have another team. And I remember her going, be like, what? I'm not coaching t-ball. Like, what? There's got to be somebody that would be willing to coach. Like, I don't know anything about.
Yeah.
I can't coach other people's
Yeah, yeah,
kids. I swear, I walked in the room like. Not even a minute later, she's like, "So we're gonna be the Angels." And I'm like,
And you're coaching.
just like that. I'm like, dude, I gotta get this guy's number. Like, I don't even know what he just said, but
Yeah.
he just 180'd, and
Yeah,
all of a
yeah.
sudden we're coaching.
Yeah.
So yeah, but honestly, it's been really fun.
That's cool.
Yeah, I mean, they're all 4 and 5. So in the beginning, it was just complete chaos.
It'll
Oh,
teach you.
yeah.
It'll teach you
Oh.
patience, won't it?
Oh, yeah.
Yes, very, very funny. We had a game last night actually, and the field was just completely soaked.
Yeah.
Oh.
Dude, the kids were obsessed with the mud puddles. It just became like who could throw their glove in it. It's just like, yeah. And
Man.
I have learned to just roll with it.
Yeah.
Yeah, absolutely.
They're just
Take
out
a
there
break
to
from
have
one
fun.
chaos to go to another. Yeah, it's really taking some time down, huh?
Yeah.
Yeah, you get some gym moments in that.
Oh yeah.
Oh yeah. I mean,
Yeah.
we've got a couple kids that are just pure entertainment.
Oh yeah, dude. Yeah.
They just
That's
Oh,
awesome.
great,
so
man.
it's great.
So you think you'll continue to do that as he gets
I
older?
honestly think I will.
Yeah.
Now that I'm like, even though just randomly landed there,
Yeah.
I think I'll probably keep doing it.
And it's probably great for like forcing you to have a little balance
It is
too, right?
Yeah, that's
yeah.
that's what I
Yeah.
need, right? 'Cause
Yeah.
Unfortunately, my wife does all the communication with all the parents, so I don't really have to take on that part. I just
Yeah.
show up and
Yeah. She's the voice. You're the.
yeah. I'm
you're
just like I
yeah.
said, she's the head coach.
Yeah, I
I'm
gotcha.
just the assistant.
So I want to get into a little bit about like today's market, where rates are and everything. How is that looking for new buyers?
Honestly, I think it looks great. So rates have recently come down to the lower 6% range. Even some types of loans, VA and FHA, can get down into the 5s.
What's today for reference?
Oh, today is October 29th.
There you go.
30th. Yeah.
Yeah.
I lost days this week, man.
That's
It's
why
been
I
a long
asked. I was like in my head going, what day is it?
Oh, you
Yeah,
got me for a second.
Yeah.
Maybe I'm wrong.
That's right. Halloween's tomorrow. Oh,
'Cause-
it is the 30th.
Yeah.
Because
Hey, I lost 2 days this week.
when this releases, it'll be December, and I don't want people thinking,
Oh,
Oh,
gotcha.
yeah, my fault.
No. Good
In
point.
December, it might be 5.5.
Yeah.
So he's like,
Yeah.
what? Rates went up?
Yeah.
Day before Halloween. So yeah, I mean, I think the difference right now in the market for buyers is, you talk to any real estate agent, and they'll tell you the inventory's up, right? There are more homes out there. Buyers can be a little bit more
Picky.
choosy.
Yeah.
They can think about it for a couple days. They don't have to like jump on
They're
it
not
right
in a
away.
fire.
Yeah. Houses are sitting longer. That's, it's actually a healthy thing. I still see that, that home that goes up though, that like, it
Goes
goes
quick.
like that too.
Yeah,
That
it
still
happens.
happens.
Yeah.
But I think it's good for buyers to be able to like, dip their toe in and go look at some homes and actually have 10 or 12 homes to look at instead of, 2 or 3.
Not rush to purchase
Yeah.
something.
Hey, if you want this one, you better move today.
Right.
Yeah.
No, but especially first time home buyers.
Oh,
yeah.
That's rough.
Yeah, it's tough.
That's tough to like just, even if it feels right later on, you just never know because it feels like it was rushed.
What, is that like a trend right now with buyers as far as like waiting, or are they more jumpy like they would if the market was less inventory? You know what I mean?
So I feel like everybody has their own individual personal timeline.
Okay.
There are things that cause them to move quicker or take their time. I always encourage a buyer that is even just thinking about it to like find out where they stand. Earlier the better. Just to just to get numbers, just to get an idea of like what sort of a price point that they'd be comfortable in, even if they don't really plan on making a move for several months later. Because it's better than waiting until all of a sudden you need to move in 6 weeks.
Yeah.
And then it's going to be rushed.
Yeah, on the insurance side of things, I've always wondered, when the DTI, debt to income, gets tight, is it something where it's a conversation had with the buyer? Like, hey, this is really tight. Maybe it's something you don't want to. I'm not trying to
Absolutely.
throw
No.
you into the wind here and like down
it's-
you, but I've always wondered that. Like, man, we're off by $50 a year on the insurance. I'm like, you know what I mean?
So in those cases, and it could just be that's the way it went, or it could be
Paperwork thing.
a particular husband and wife. They both work. They both have income. Maybe we can only use husband or wife because
It
of
doesn't
certain
necessarily
reasons.
give the full picture.
Okay,
Right.
that's
So,
why I wanted the listeners to know.
there are other income coming into that household. So you look at it and you're like, $50. Like, should they really?
Yeah,
be
the one
buying
guy,
this
like the
house?
husband might be self-employed and doesn't
Right.
show
So
enough
that's-
income on tax returns.
That's an
example.
example of where, like, you think about it and you're like, ooh, if that is making or breaking this deal, like
Right.
maybe that's not the best move.
Yeah.
But then there's that piece of it, right?
That's what's shown on paper, yeah.
Right.
Or whether you can show. Yeah.
Right. And then there's the other times where even at pre-approval where, it's just, hey, we're threading the needle here. Like, you got to stay away from this area, stay away from this. Because I usually tell anybody that mentions Merritt Island or Cocoa Beach, like, we obviously try and estimate the insurance at that stage.
Which
That's
you
all
do a
we're
pretty
doing.
good job, by the way.
I try. Thank
you
you.
do pretty darn
Thank
good,
you.
man.
I try.
You're really close.
It's always going to continue to surprise me.
Yeah.
I think, even you guys, I'm sure it's like just one of those things where as long as you've both been doing it, you just, for us, I mean, we don't even have an address in the beginning, right? We're literally just, okay, you mentioned Merritt Island. I gotta use like $4,200 a year for an insurance
Yeah,
estimate. That's just like my blanket go-to estimate.
Yep.
Yeah.
And
Especially with no address. Yeah.
yeah. And then, they'll talk about like the Port St. John or maybe the Titusville area. And I usually have more of a like 200 a month, 2,500 a year type go-to estimate for that.
I think that's super important in the buying process. This coming from the insurance side of me. Like when a buyer comes or is going to look for quotes, they already have that in their brain of like, what should I expect? And when it's close, within a couple $100, it's not a surprise.
Yeah.
Where if somebody has nothing at all, or maybe it's like, oh, it should be $1,000 a year, for a 1950s home in Merritt Island.
Yeah.
You know what I mean?
Yeah.
And then it becomes a big thing, and it could blow up the whole entire thing.
Right.
And it's usually just because they didn't know.
Yeah.
So
And
I
that's
think
got to be
super
getting harder and harder. I mean, it's hard for us sometimes.
Oh, yeah.
Like sometimes people will call us, go, hey man, can you just give me a quick ballpark on this house? And you're like looking at it, it's a frame house in Merritt Island. You're like, God, dude, that could be $8,000. That could be, you know what I mean? Like, but you don't want to say that without being for sure. You don't
Yeah. Yeah. No, it's
so
true.
like, yeah, no, it's tough. I mean, the market has definitely, like you were talking about how, it used to be the Wild West for you back in the day where you could close any loan.
Yeah.
I mean, that was us probably 6-7 years ago, where it was like literally we would joke and say if you could give us a date of birth and you had a heartbeat, like the insurance company would take it.
100%.
Like, they didn't care really.
Oh, no.
Yeah,
Like,
so
you know what I mean? Like there was very little underwriting going on, and now it's like, man, every single thing is getting nitpicked. It's getting a little bit better because the market's cleaning up, but
Yeah. With homes have like, corroded plumbing, certain electrical or roof issues, whatever, but we got to close in 2 weeks, and it's like you're just getting that. It's like, oh boy, and then we're in the hot seat, or we're scrambling. But no.
So there's been some drastic changes for you guys over the last.
Oh yeah.
I mean, I've obviously felt it since even like COVID ended, where it just felt like the regulations on roofs and things like that definitely got tighter.
Mm-hmm.
Oh yeah.
Yeah.
Yeah, it was hard for us to navigate. It's almost 180 difference now than it was even
this
2 years ago.
Yeah.
This year is our companies are back to profitability, which kind of changes everything. And they're opening up guidelines, new carriers coming on the market every week. I mean, we're
the new carriers, that's got to be huge. I mean,
absolutely.
That's what we need.
I'd
we
say
need
the last
competition.
6 months. Honestly.
The more competition that comes in the market, the more underwriting guidelines will open up because everybody's competing for the business, and also the more rates are going to come down. As carriers return to profitability and there's more competition to get that business, they're going to need to get competitive.
Yep.
I mean, it's only natural for a certain number of carriers to be, the main carriers producing in this area. It's only natural for them to take advantage of that and those premiums to get higher and higher.
Correct.
If there's nobody that they're really like having to lower
it was
those
definitely
premiums
just an
to compete
unhealthy
against.
marketplace with really very little competition over the last couple of years for good reason. I mean, they couldn't make money.
Right.
But now that profitability's up and honestly it's a total 180 for us this year.
Yeah, for sure.
I've said it a bunch of times on the podcast. Like, I'm getting excited again. Like, I'm dialed in again with the business, and it was miserable a few years, but
lost my hair.
But
these bags didn't grow themselves.
Dude, you don't got to tell me. I feel like I've aged 10 years in the last 5.
Is there a part of the mortgage world that kind of just grinded you to a pulp, or was it just?
I feel like for me it comes in waves. I do get to a point where I do get burnt out, and I do need to take a step back, which anybody who works with me regularly knows that this year was the year of vacations for me, including getting married. I went to Mexico 4 times.
Awesome.
Oh man,
Good for you, dude.
In
That's
2025.
Great. That's awesome.
One was the wedding. One was cross-country trip. Another one I went with Josh Siddons actually on his work trip. So I was definitely a little bit of like YOLO. Like, I just need to go.
You needed that, I'm sure.
And I could tell when I would come back, I was a new person.
Oh,
like,
yeah.
I was just rejuvenated, like ready to like dive in. I was a lot more patient. I was, just taking more time with each customer. And lately, especially like after picking up Jamie, it's been a wild month. So she's like closing out her first month. She came in with a lot of files, and it's a lot of work to get a loan officer up and going. There's all new systems, all new this, all new everything, right? They're trying to like get
Get her
settled,
acclimated and all that.
but
yeah.
at the same time not lose any, momentum. So I got to pick up a lot of that just to make sure that she doesn't feel it. And Charlie's had a friggin' phenomenal year too.
Yeah,
so like
awesome.
I got to
keeps me
hang
on
out
my
with Charlie a few weeks ago.
Yeah.
He actually was at an insurance I got invited to a golf tournament up in Jacksonville.
Oh yeah, okay.
And
that's cool.
We had dinner together that night. Solid guy. I didn't really know him that well before the dinner. He's a good dude.
Very solid guy. Yeah.
Good dude.
Was in the Coast Guard for 20-something years, right?
Takes care of his vets, man.
Yeah, he does. He does a lot of VA loans, which rightfully so.
Yeah.
What's one misconception about the mortgage process that you wish you could clear up once and for all?
You know what? There's one thing that does always kind of irk me a little bit. It's not really about the mortgage process, but it is more about when it comes to example, right? I have a buyer, they're pre-approved. They go make the offer. Their agent calls me and says, hey, the listing agent, they're not taking FHA or VA, only conventional because the roof's too old. Which is just the biggest misunderstanding ever, because I try and explain to them it doesn't matter if the roof is an issue, it's still an issue for conventional financing. It's the same issue. In fact, conventional just on paper has a guideline that's a little worse than FHA and VA as far as like what that roof inspection, what kind of life has to be remaining. So I always try and educate realtors like, hey, if you're eliminating FHA and VA buyers because you think you have a roof that's only going to work for conventional, I promise you it's still going to come down to insurance. And if we get insurance, it works for VA, it works for FHA, all the same.
Yeah. Roof's always the
we
culprit.
see that a lot, and it may not even be the roof. We see some certain other things where there's no flooring or something like that, and they just think that conventional's this get out of jail free, anything works, but it's really not. Those sort of things work for FHA and VA loans too.
Yeah, gotcha.
That's a big misconception, I think. Another one is a lot of banks out there, mortgage lenders, have credit score requirements, and so I feel like certain amount of real estate agents, certain amount of buyers experience that, and they think that's just kind of like across the board the case. And amongst a ton of reasons that CrossCountry Mortgage, I feel like is sets us apart, is we follow the agency guideline exactly. VA, FHA, and to be honest, VA doesn't even have a credit score requirement. So lenders just drill it into real estate agents' brain that you have to have a 600 or you have to have a 580.
Why would that be?
Because
not to get too technical.
Well, it's because banks obviously have what's called an overlay in place, right? So the VA may purchase that mortgage, but that bank may have no interest in actually taking that risk that the VA may not, right? So maybe Ginnie Mae won't purchase that loan. So they just have more of a smaller pool where they're comfortable with. So their overlay is the score has to be this high.
Okay.
But truly, so Charlie actually has set the record in my office because we closed a VA loan with a 490 credit score.
Wow.
Which
for people that don't know, that's huge.
You say that and you're like, dude, somebody with a 490 doesn't need a credit, buy a house.
Which that's not the full story.
It's not the full story,
Correct.
right? And so there are certain things that, we do and make sure that like it's not just somebody that hasn't paid a bill for, the last 2 years. There's a lot of, certain things that went on that were impacting that score when you look at the full picture, they really could afford that home.
Well, that's cool too that you guys are able to actually notice that, right? Because you hear so much like credit score obviously matters, right? But like the fact that you guys are able to look beyond the score and say, okay, what's really going on here? Can we paint a picture for underwriting? That makes sense, works? Right?
In certain cases,
yeah,
like in that one, yes, there is so it's called a VA manual underwrite, right? Where yes, it's looked at as like the whole picture. Now, in other cases, yeah, there are certain requirements that have to be met to meet that, and sometimes they don't. So even though the whole picture might be okay, if there are certain things that happened in the most recent 12 months that show otherwise, then it may not fit the box, right?
Interesting.
But still, that's one thing that and FHA, right? It's same. Everybody thinks you have to have a 580 or a 600 credit score to qualify for FHA, when you really don't. We can do them all the way down to 500. The only difference is that when that score drops below 580, that person has to put down 10% instead of the normal 3.5%.
Yeah.
So I don't know if you know this about me, but you were talking about being a mortgage broker, right? Those were the days where you had all your different rate sheets.
You did it, didn't you?
So I was a wholesale account rep.
Oh, that's right.
So I was the guy coming into your guys' office going, hey, use us to underwrite and fund your loans.
Flyers.
Yeah, with all the flyers going, hey, we got this no-doc program now. Hey, we got this Alt-A program.
What was the company that you worked for again?
American Mortgage Network.
Okay, yep.
And then we ended up getting bought out by Wachovia, and they changed our name to Wachovia Securities.
Yep. Okay.
And then, they ended up going out of business like everybody else. I remember sitting on my couch in the mortgage business at the time, a wholesale rep, watching Countrywide go out of damn business, and I was just like, I'm done. I don't even know what I'm going to
do. Yeah, and that's really what it was like. Just at any given day, we would probably have 5 to 10 of the account reps, because subprime is the American Mortgage Network. What you were doing, the subprime lending, those no docs, and I swear, when I first got into it, it felt like you had to have a 640 to do a no doc. And then 3 months later, now you can have a 620. Yeah. And then 6 months later, you know what? 580, no doc. Yeah. It just kept getting more and more.
I remember like one of our go-to products was a 95% LTV, 620 score, no doc.
Yeah.
What's LTV? Yeah. For anybody that's...
Loan to value. So 95% loan to value would mean 5% down. So somebody could have no job, no income, but put down 5%. And that 5% could come from anywhere, because we didn't have to get bank statements, because that's also part of the no doc. Yeah. So, yeah.
And that was a flex rate mortgage too, right?
And back then,
when he says it was the Wild West, dude, he ain't kidding.
That was a flexible rate mortgage, wasn't it? It wasn't fixed.
In most cases, subprime, you were getting... So they called them 228s and 327s back then, which is the same thing as a 2-year and a 3-year ARM, right? But it was just how they referred to them. So yeah, it was only fixed for 2 years or 3 years, but you could go with the 30-year fix. The problem was it was like 0.75% higher in interest rate, so no one did. Right? Yeah, and but the subprime thing, those guidelines kept getting looser and looser and looser. And I was just a 22, 23-year-old kid. I was just like, man, this is...
My job's easy.
Yeah, this is great.
I'll do 50 of these.
And then, 2008 and all that, it just was like a... Wow.
Yeah, you had to start sharpening your pencil, become almost an underwriter, right? Yeah. Like you had to really understand exactly all the risks.
It was very, very different.
Not to try to plug a movie, but The Big Short, I'm sure you've heard of that movie. The way they explain it when they interview those two knucklehead mortgage lenders from down south.
I still get friends of mine going, dude, that's you.
Yeah, like they're sitting there eating something, and he's like, check their credit score. What are you talking about?
Oh, he goes, what do you mean if they get declined? If they get declined, I'm not doing my job.
Yeah, exactly. They own 3 houses.
Yeah. Oh,
that's wild.
Yeah, it was. Gosh, looking back now, I'm just like, wow. Just what happened. Mm-hmm. It happened for a reason.
Yeah. Is there anything in the past you changed, like knowing now and take with you back then?
I wouldn't have bought 10 houses at 25 years old.
Yeah.
I would change that.
Yeah.
How many did you get stuck with?
Gosh, it's all a blur now, but we offloaded most of them, just took it on the chin. Yeah. And, I would say a good 3 or 4 was just
total loss.
Yeah.
Yeah, I got stuck with a couple.
Yeah.
You're in
Yes.
good company.
It was that was a big. Whew, that was a lesson. That was a lesson there.
I've come such a long way in my journey in life. You guys are talking about owning 10 houses, 5 houses. I was paycheck to paycheck till like 10 years ago. You know what I mean? That's how
Well, back then, I mean, you honestly felt like you were missing out if you weren't buying a property and trying to flip it or something.
what
I
it
mean,
felt
and it was
like.
so easy money to get too, and it was like,
That's what it felt like. It really.
but it was
important to
definitely a
know
house
that.
of cards. I mean, looking back, it was just absolutely crazy what was going on, and
Yeah, I mean to know
yeah, hindsight's
Yeah.
2020, right?
then what you know now. Jeez, like. But yeah, it really did feel like you were missing out, you know, because especially being in the mortgage industry, it was like I just saw all these other people doing it,
Yeah,
Yeah.
you know, and it was just like, wow.
yeah,
And we did actually do a few where it was like, wow, but
yeah.
you know,
I wouldn't change any of it either for me. Like, honestly, like the mortgage industry failing in 2008, 2009, 2010, whatever it was, you know, really brought me to
Here.
where I am.
Yeah.
You know, I wouldn't be
Same.
in the insurance business if that didn't happen. And
Yeah.
I love the insurance business. I wouldn't change it for the world. You know what I mean? And so, like, for me, a lot of lessons were learned, you know, going from basically not surviving a meltdown in the mortgage business to then the last 3 years in the insurance business going, holy shit, is this going to be the same damn thing I lived with in the mortgage business? Like, it was bad for us for a while.
honestly,
And it gave me kind of like perspective of like, it's going to bounce back. Just hold on, dude. Just freaking hold on. You know what I mean? And so
Yeah.
I don't know if I hadn't gone through that in 2008, if I'd be sitting here with you today, I might have jumped ship thinking like, I need to get out of here. You know what I mean?
right.
So
yeah.
it kind of, lessons were
Makes you a
learned that
little
were
more
important.
resilient.
Correct. It made
Yeah.
you way more resilient for
Yeah.
sure.
Has this year's changed quite a bit? Because I feel like the beginning, middle of the year, there was like a lull in the mortgage side.
Oh gosh, this year.
What was that?
For a while?
Yeah.
It was definitely like this. You know?
Yeah.
It. Who knows, really? I
Right.
mean, I got my own opinion, but
Yeah.
it's mostly news driven. I feel like, and there's always a delay. You know, when we feel things like pick up as a result of news or slow down as a result of news.
That's a good point. I think it was news driven because the news was a lot louder when it was slow. Now you don't hear so much, and now
yeah.
it's like great.
Well, and news is news, right? Like if it's not bad news, it's not really news.
Yeah.
true.
Yeah.
And,
Yeah, I mean, that's why they were at our office yesterday, because a bunch of people flooded their houses got
Yeah.
flooded, you know?
Yeah, that's
right,
true.
Yeah,
You know? And so, I mean, that's why they were here. And it's unfortunate, but the news really only reports the bad stuff, not a whole lot of positivity.
Yeah.
yeah. But to more to your point, this year, just number wise, I mean, gosh, I think I closed somewhere in the neighborhood of about $65 million last year, and right now I feel like I'm somewhere around 78 million.
Right.
We still have 2 months to go.
Is that just you personally, or is that your whole branch?
The whole branch is up. I'm up about probably that much. Charlie's definitely having a better year. Andy Yowles, he's another one of my good loan officers. He's having a better year.
That's great.
So the whole branch.
I like Andy too, man.
Oh,
Good
I love
dude.
Andy.
Solid dude.
Yeah, Andy's a good dude. He's,
Honestly, man, I don't know anybody in your crew that I could say. You can't say something bad about anybody in your crew. You got a freaking
Your hiring
awesome
process
crew,
is
dude.
spot on, by the way.
Yeah,
That's
dude.
serious.
yeah, no, that's awesome. Thank you guys. I'm extremely proud of them. The girls, I feel like, especially the last few months, Lee, Michelle, Casey, Stacy, they have really taken the brunt of it. And I would say one of the biggest struggles for me over the years, and probably most business owners, right, is scaling growth.
Mhm.
It's tough because, at least for me personally, one of my biggest fears is to hire somebody because I'm busy,
Mhm.
and then 6 months later, I'm not as busy, and now I can't really afford to keep that person on as support, right?
Yeah.
So
It's a balance. Like, you don't want to bring somebody on and not really be able to provide them the structure and training that they need, right?
yeah,
And the support they need. But at the same time, like, you got to push forward somehow. And it's like,
and I think that's probably for me, like I've always, so business gets to that next level, but when you get that busy, if you don't, well, if you're not knee jerk reacting and hiring somebody, you're basically just grinding it out yourself, and then making sure that it's sustainable before you go and hire another person, just to make sure that, like, okay, I'm going to hire somebody and I can not have to worry about, not being able to, continue that person and keep them on. So I have gone through so many of those waves over the years where it's like, okay, I remember a few nights when I was at Caliber, I literally slept there.
Wow.
Like, just.
Yeah, that was full grind, Josh. And
that was like, just, I couldn't get the support I needed as quickly. So it was a different process. But ever since CrossCountry, and it's been 7 years now, I just got to make sure that it's sustainable. And then it's like, okay, if I'm working at that level for 3-4 months straight, I'm like, all right, let's bring on more support, right? We're obviously going to keep this up. And then
do you have like an ops manager or anybody that kind of helps on the ops side of things, or is it?
So like, Michelle Weber, I would say, is probably maybe not be her official title, but definitely closest thing to ops manager. She takes a lot off my plate. Yeah. And even on the marketing side too. But yeah, the ops manager piece, like, they're not really actually doing any of the hiring or that process. But CrossCountry does make it very easy for me on the paperwork side. All I got to do is fill out a form.
Got you. And then they get them in the system and
they get them set up. Yeah, good. That part's easy.
Yeah. That's nice. Well, you want to do some rapid fires?
Yeah, man, let's do it. You got anything else you want to touch on? Anything you want people to know about Quibodeaux?
Oh, goodness.
Or CrossCountry in general, or anything you guys got? Like, what? I got a question for you. So, like, kind of want to touch on when you look into the future, man, over the next 5 years. Like, obviously, as a business owner, you got things that you're like shooting towards, right? Like, where do you want to take CrossCountry and what you're doing, and how do you want to, how are you gonna, like, you just talked about scaling? Like, is that on your mind of like, how do we really take advantage of what we got going on, or is it let's just, like, what's your vision of it, I guess is what I'm asking.
I actually toggle back and forth sometimes. I think Brevard County is, it's on the smaller side, right? It's a tight-knit community. I don't want to create an environment where I have so many loan officers and they're all under me and competing against themselves, right? But at the same time, I've just become more selective about who I would bring onto the team. I do intend on growing a little bit more, probably not a ton more, but over the next 5 years, I feel like I would like to see myself pull back maybe a little bit on production and really focus on
start working on the business rather than
on the loan officers' growth and like helping them. That's another struggle I have is, trying to support these LOs and make sure that, they're, getting stuff done and being as busy as I am. It's tough. That's tough, and I don't always know that there's a problem. But whenever, a loan officer trusts me, their problems become my problems.
Yeah. Does it ever make you nervous when you're talking about something like that? If you step away more and like let's say your referrals or loans are coming to you divvy out your team maybe. If it's not done by you, and I'm not saying they couldn't do it. I'm not saying that just your person.
It's a great question. It always has. It's the reason I haven't done it sooner.
I got.
Yeah, it always has. Because, a referral partner sends you a loan because they want to work with you, right? That's the idea behind it. And in other markets, like I've got a friend of mine is a very, very, very big producer at CrossCountry Mortgage in South Florida, Craig Stelzer, and he's actually pulled it off. He's pulled back away from being the actual originator up front, and his branch is still just knocking it out of the park. Yeah, he's just not the personal like producer. So
I think what
It's
you'll
doable.
find, 'cause I went through a transition here,
Mhm.
where I was top producer and then I just got burned out, and the business kind of needed me concentrating on other things.
The business needed you to do that.
Yeah, you know what I mean? For sure. And when I did that, we took off like a rocket ship.
Mhm.
It's like as soon as I was able to start working on the business and fixing our problems and our processes and making sure the support was there and dialing everything in, like we became a better, different company,
Mhm.
and my life improved. So I encourage you to, it's
Yeah.
hard, dude. But
Yeah.
trust me, because I mean, we lost some business too along the way. There's people that only wanted to deal with me, right? And they weren't able to anymore. They're stuff like that. But the big picture of it, I wouldn't change for the world. I mean, the moves
It's
we
good to
made
hear.
5 years ago, I think have paid huge dividends for all of us.
That's good.
And what it does
Yeah.
too, man, is it gives other people in your organization opportunities, right?
Yeah, very
And
true.
like for here, like it gave people opportunities to become an operations manager, Jason to become the sales team lead, right? And like all these different, it's just the better people in your organization kind of rise to the top
yeah, you
and
gotta
start to take over some of those
give
different
them
roles.
more responsibility.
Yeah, absolutely. But yeah, man, dude, I can't thank you enough for coming in today, dude.
Yeah.
We're gonna ask you some rapid fire, get this thing wrapped up.
Rapid fire. I'm curious.
All right.
All right.
At
Let's
the
do
end,
it.
I want to hear you plug your Instagram handle before we leave, by the way.
Yeah, dude.
Oh,
Papa
Papa
Bear
Bear 08.
Oh,
Papa
there
Bear.
it is.
I'm in the works to try and figure out how to incorporate Loan Daddy into my handle. There's a couple
Please
guys.
do that. It's so
Papa
fitting
Bear
too.
08 meets Loan Daddy. I'm not
Yeah,
sure how we're
I
Jay,
love
gonna
that.
do
Jay
it,
calls
but-
you Sir Quibodeaux when
Every time.
when you guys booked the podcast. He emailed me saying Sir Quibodeaux will be here at 9:30. Yeah.
I was going to introduce you, Sir Quibs. Thanks for joining us today.
Yeah, no, the
So I go for Instagram handle Sir Quibs.
No.
Yeah,
I like that one too.
I'm going to ask, who's your biggest mentor in your life that got mortgage, life stuff, anything? Do you have a mentor you've always looked up to?
Oh my goodness. My biggest mentor, I would say, man, that's tough. So my Uncle Tim has always been a good mentor of mine. He's always been a chief financial officer of, hospitals and whatnot. He's always been a mentor. Not, mortgage.
Yeah.
business
No, just
related
life
whatsoever.
stuff. Yeah.
Yeah, he's always been a good mentor of mine. And I mean, my boss now is he's definitely a good mentor. He's really taught me a lot, just
Mhm.
about pieces of the mortgage industry that I was never really involved with, before.
No, I think it's always good to reflect on that. Like Steve's definitely been my biggest influence as far as stuff like that, and it's always good to remember that. That's why I asked the question.
Yeah, no, and Craig, the guy I mentioned earlier, because he's still in the trenches, like just
grinding away.
grinding away. Like if I ever needed anything, just whether it's, advice, sometimes I feel like his advice, I'm just like, it's not doable. Like, it just leaves me where I'm like, he's just,
Yeah.
All right, just a quick rapid fire.
okay.
So you sweet tea or coffee?
Coffee,
Pizza or chicken wings?
pizza,
Ranch or blue cheese?
ranch for sure.
Dude, all
Thank
good
you.
answers.
Thank you.
Yeah, I know.
Blue
I was gonna
cheese.
worry about you if you say blue cheese.
I thought
I'm a ranch guy.
Okay.
I'm a ranch guy, 100%.
I thought you were a blue cheese guy.
No. Well, I grew up blue cheese. Somewhere in my adulthood, I got smart and switched to
I
ranch.
am not a blue cheese fan.
No.
No.
Gosh, no.
I mean, take chicken wings any day of the week too, but if I got to pick, I'm going pizza.
Yeah, beach day or boat day?
Beach day.
All right.
Yeah.
But dude, I tell you what, man. This honestly, like, I don't want to hurt anybody else's feelings, but you've been one of my favorite guests so far, dude. This was really
100%.
awesome, dude.
Yeah,
You're really, really good at
That's
this.
awesome. I'm glad to hear it.
So
Man. Thank
I
you.
appreciate you.
What's next for you guys at the office? You in CrossCountry? What are you looking forward to?
I'm
in the
already
future?
looking for our next office. To be honest,
He's only moved 7 times. Gosh.
Yeah, I mean, well, this is only our second office. Yeah.
Oh,
We're
is
at
it
now.
that and that?
Yeah. So the one I had in Rockledge, right
Yeah.
around the street.
Oh, and then Melbourne.
Yeah, and this one. But we've just kind of already outgrown it. And I'm worried I'm going to be looking at something that's going to take a 6-month build out. So I'm just already like, it's on my radar, like
Mhm.
to really start hammering on it in January just
Awesome.
to make sure we're ready.
How much space do you think you need?
I would really like to have 5,000 square feet.
Yeah.
We have like 3,400 now.
Okay.
And it's just enough. I've got 15 employees total,
Holy
but so many
cow.
people work from home now. Like the girls,
Yeah.
Casey, Stacy, Lee, like Patrick, like
Mhm.
it just makes no sense for
Yeah.
them to come in. COVID changed that for the better, really. They're wake up, there's no commute, there's no getting dressed, there's just like
Yeah.
they just start working. So
Yeah.
they're more productive, and I'm happy about that. But even with all those folks, working from home, like we need more space, and
Wow.
I'd like to have, a little bit more space to hold some events and things like that.
Yeah. No. Yeah. Super cool.
Yeah.
Awesome, man. Well, how can people find you if they're looking for Quibs?
Oh my goodness. Yeah. Best way I would say is to call me.
Okay.
Honestly, I get about 700 emails a day, so that's rough. But
What's a good number?
my cell phone number, 321-917-6247. I've had it for 20 years.
Ladies and gentlemen, that is what a brave guy.
Very brave. But you hand it out to everybody, but that's what makes you, right?
Yeah.
Yeah.
No, I mean, I already get enough spam and,
Yeah.
blah, blah, blah. That's not going to.
Yeah.
I appreciate you taking the time, buddy.
No,
I really
thank
do.
you guys.
All right,
Have
man.
fun.
Let's get out of here, dude.
Okay.
Appreciate you.
All right.
See you, buddy.
See you guys.
That's a wrap for this episode of the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We can't thank you enough for being part of our journey. If you enjoyed this episode, be sure to subscribe, leave us a review, and share it with a friend. Until next time, 3, 2, 1, we're out.